listen up. The mortgage industry is booming right now, and I want to talk to you exactly what's happening. What are the numbers? Why is everybody in such a frantic to go buy a house, right? Hey, if you're new to this channel, my name is Jordan Aubrey. This is the Real Estate Investing Done Right YouTube channel, where we talk about real estate investing. Basically, everything has to do with real estate investing, market analysis. We're getting some personal finance as well, but essentially, we're here to make you more money. So tune in. So let's welcome to it. Obviously, I put the top reasons that I think the industry is blowing up right now. And this is numbers that I've done my research on, right? So it's not hypothetical or any of that. Obviously, my opinion and why I think the market is blowing up right now, obviously that's going to be hypothetical. But I believe history repeats itself. The exact same thing that happened in 2008 or right before we anticipated a crash, the market looked identical to that, right? So let's jump right into it and let's figure out the numbers and just let them speak for themselves. So we talk about the mortgage industry is up, right? So we talk about demand is 40% higher year over year. So essentially last year at this particular point, mortgage applications are up 40%, right? That's a big indicator that a lot of people are, I'm not gonna say scared, but a lot of people are thinking that if the mortgages go away for whatever reason, if the banking system goes away for whatever reason, this is their opportunity to buy right now, right? So if you had a thought that you wanted to purchase a house in 2020, right, or 2021, and you was like, man, you know what, I think we're going to be in position. Well, right now, with everything going on right now, there's a lot of fear driving the system, and people are like, well, you know what, let's move this process up a year. I know we wanted to wait until we got some money in the bank, but essentially we got enough right now. Let's go ahead and pull the trigger. I'm pretty sure that's the reason we got a 40% increase. A lot of people are trying to get a deal in before everything shuts down. So that's the way everybody is thinking. It's the scarcity mentality that's actually driving the mortgage industry right now, which is a good thing. If you own property, you're selling at a premium price because not a lot of the inventory has went down, obviously with coronavirus. So if you got one of the nicer homes in the market, you should be able to get it sold ASAP. So let's move on to the next thing. Low rates on average, right? They fell between 3.7% for a 30-year fixed loan, right? Extremely low. That is very low. And that's for if you put 20% down, I'll be honest with you. That's where that math came in. But it's still extremely low for a 30-year fixed mortgage, right? Lower than what we ever seen traditionally. 15-year fixed is down to 2.62%, right? Conventional loan. Another good one, right? Now we go to loan size. Continues to goes up to 36.8, right? $368,600. Now that's national average. That's any kind of loan, VA, FHA, conventional, right? That's just national average. But up. What did I say earlier? If you're a homeowner, this is a perfect time to sit on that particular property. I wouldn't even say sit on it, to put that property on the market and hold at your price. If you got a nice enough home, hold at your price. That way you can get that particular house sold. If for whatever reason it's not selling, it's probably something going wrong with the showing, right? If you're getting a lot of people at the house and it's not selling, it's something wrong with the showing. If you don't have a lot of people coming to your house, typically what ends up happening is the price is too high, according to your pictures, according to what they're saying on Zillow, Redfin, Realtor.com, right? The price is too high. So make sure if you're getting showings, fix whatever's happening at the house is not going right. And if you're not getting showings, make sure you adjust the price. But essentially, hold firm, because the national average, everybody is paying more. Right, we walked into this year as a real estate professional anticipating a drop of at least 5 to 10% in price, or at least staying firm, right? DFW, we haven't seen that. That's where I currently do a lot of business at. We haven't seen that, and literally no market has seen a drop because the demand and the scarcity is up so much, right? 40% of loan applications, the demand is up 40%, yet the inventory is down. And that's across the nation for the United States. So that is a big telltale sign right there. Look at this. Look at this one right here. Refis is up 3% this month. That's from last month. But check out this big number. They're up 60% since last year, right? Now, a big thing is that when people get when houses are selling, prices are going up. Typically, people want to cash out, bring their money out, right? But in a time like this, with coronavirus bringing so much uncertainty, why sit on a house with a ton of equity when essentially you can refi out of it, sit on cash, and now your particular cash, just in case something goes wrong, just in case you lose your job, whatever the case, now you sitting on some cash that you can put 6, 7, 8, 12 months of reserves right there that you can take right out of your house. I'm a firm believer that a paid for house is not an asset. The asset makes you money. Asset don't save you money, right? So with that being said, I'm a firm believer to take that money out. Unless you just plan on retiring next year or within the next 5 to 10 years and you want to pay it off, I understand. But if that's not you, which 90% of us, that's not us. If we're in this situation, finance that home. If that's your situation, refinance that home, and then at that particular point, we rock and roll with the cash in our pocket as reserves, right? But this is what's happening right now with the mortgage industry. Obviously, the housing mortgages drive the housing, right? Banks drive the economy. If you can't get money from the bank, the economy goes down. Exact same thing happened in 2008. The bank stopped lending, right? Nobody was able to buy a house. Real estate market crashed because the only people that was out there was cash buyers, right? Investors looking for the next deal. So essentially that's what happened, because nobody could get a loan for those particular properties. But right now, as you can see, hey, the demand for a mortgage is up, and everybody right now is lending. So right now, the housing market is doing very, very well. If you're a realtor and you're not benefiting from it, I'm sorry. You need to turn on your hustle button and activate it, and actually go out there and make some money. If you're a real estate investor and you're thinking about taking down that particular property, if it's going to take 6 to 7 to 12 months, 13 months, I don't necessarily know unless it's affordable housing, right? But if you got you a flip that you can get in and out, man, it's the perfect time right now, because up 40%, that's going to continue to skyrocket as people push forward. More people are in a position where they're saving more money just so they can buy them a house, because like I said, scarcity mentality is driving a lot of it. And I'm quite honestly excited to see what the future holds with this particular method as far as what's going on. So this video was not meant to be long, just meant to give you an update on what's happening in the mortgage industry. Like I said, hey, if you enjoyed the video, make sure you click the thumbs up. I would love to hear back from you. I know just my last video, I went on ahead and answered a couple of questions I had on the comments. So if you have some questions for me, definitely make sure you put them down below, and we'll make sure we get those answered for you. That way you can make the best decision moving forward and hopefully make you some money. Hey, keep winning.